Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to today's live stream. So we finally got some good news for the precious metals. Good news for silver, good news for gold, and potentially bad news for the dollar. Now I won't keep you waiting. The good news comes in a few forms, but we're going to start with the technicals. Now, I say we finally got some good news, but it's funny how short everybody's attention spans have gotten, myself included, because, just looking at the chart here, it was as recently as the 17th of October, a little less than 2 weeks ago, when the silver price was putting in a record all-time high intraday of $54.46. So, less than 2 weeks later, we're quote unquote finally getting some good news. But the good news is this, to start, we can start with this post I put on X yesterday. I said, nice bull hammer candle yesterday in silver as the price bounced off the 50 Fibonacci retracement, high probability this was the bottom. And I suspect that today's market action really kind of confirms this view. If we look to the updated chart, including today's price action, you can see we have a nice green candle today. The silver price up about 3% today. Gold up as well. Gold's back over $4,000 an ounce. We'll take a look at that chart in just a moment, but let's just examine a few things related to silver here. So that hammer candlestick, which you can see pointed out by this green arrow here, what that's indicative of is, the silver market 2 days ago now on Tuesday opened up around this level, right? The top of the candle. Well, actually right here, this the bottom of the body of the candle. It dropped, and then it met strong buying, and buyers came in, and it closed near the highs of the day. So that is a bullish candlestick. A lot of times that candlestick can indicate a reversal of a downtrend or a correction. And it looks like that is, in fact, what is occurring here. This green line here is the 50% Fibonacci retracement level. So you can see on this most recent run in silver that took us from about $36 up to 54, this represents about a 50% retracement, the lows of the correction. And that's a good level to bounce off of technically. So you take those two indicators together, the hammer candlestick and that retracement level, and I think that suggests that the bottom is likely in. Now, anything can happen, but if we're just talking probabilities here, I think that we've seen the lows in the silver market, especially in regards to or when you examine this price action against what we just got from the Federal Reserve yesterday. So we had the Federal Reserve cut rates yesterday as expected, 25 basis point rate cut. The interesting thing, though, is what Powell said. So Powell indicated here that a December rate cut should not be a foregone conclusion, and that there are strongly differing views at the FOMC in regards to how to proceed in December in terms of rate cuts. He says, far from it, policy is not on a preset course. And one of the things he indicated here that was, giving some doubt as to whether or not the Fed would cut again in December was the impact of the government shutdown on data reporting. So there has been a significant reduction in the amount of data being released by these government agencies in regards to the economy. And, the central bankers, they like to pretend like they're entirely data dependent and they're just these, Borg-like logical entities or Spock-like creatures that I think I just squeezed in 2 Star Trek references there, but they're just, sitting there looking at the data, and that's the only thing that really drives their actions. It's not political. It has nothing to do with, supporting the government's ability to run endless debts and deficits, when in fact that is actually the case. But this affected the outlook for a rate cut. Now, yesterday when he made that announcement, the probability of an additional rate cut in December dropped from where it was very high in the high 90s You can see a week ago it was at 91%. So yesterday it was 66% following those comments from Powell. Now today they have risen once again to around 75%, but it's still less than it was a week ago. And I suspect that we are still going to get a rate cut in December. I mean, the economy is in rough shape. They need to cut. And this is actually a very bullish development for gold and silver in the sense that we're seeing gold and silver rallying today despite the fact that the anticipation of a further rate cut in December has diminished. So right now, markets are only pricing in about a 75% chance of a rate cut. When that continues to climb higher as we approach that date, that suggests further support for the gold and silver market, right? If the gold and silver market are not pricing in more easy money right now, and then they begin to, we could see even more bullish action. I want to zoom in on this silver chart briefly let's go to a 4-hour chart. Kind of shows you what happened in a little higher resolution here. Also, it shows you that there's this bullish MACD cross right down here that took place on Tuesday when that bull hammer was forming. So the 4-hour MACD, to me, is a bit of a better indicator, a forward-looking indicator than the daily MACD, because it tends to, you get these movements before the big price moves occur. Whereas if you look at the one-day chart, and sorry to be flipping back and forth here, but the one-day chart, you're still seeing a bearish alignment of the MACD. And that likely will flip, when we get a rally, but it'll take place after the rally. Whereas in the 4-hour, you tend to get this flip before the rally. So that's a positive indicator as well. The RSI, the previously overbought condition of silver on the daily and the 4-hour chart, now is largely corrected. And so there's room for a move up here. And look at the way that silver tested this 50% retracement line. Then it rallied. It went above this 0.382 or 38.2% retracement level, retested that, and then bounced off of there. So this is all very promising from a technical standpoint. I mean, nothing, of course, has changed fundamentally, right? We're still running massive deficits. The dollar's still being debased. So, if anything, I think that this correction is just a gift to stackers, right? To be able to get more gold and silver at a discount. Because we're still, pretty well off the highs here. The rally, really, we've seen, we're still near the lows of the correction, is what I'm trying to say here. Let's look at some of the other metals. So gold did violate this trend line here during the correction, this one that goes back to August. But again, a lot of times with these corrections, what you really got to do is just kind of zoom the chart out. And you can see that if we just look at a longer term chart for gold, there's still very much a strong uptrend in effect, right? And corrections are to be expected. Not only are corrections to be expected, but they're actually a healthy move. It suggests that the bull market still has some way ahead of it, right? If we just see like a vertical spike in an asset, that tends to suggest a blow off top, a bubble, and that is not what is occurring right now in the precious metals. What you're seeing is a sustainable bull market, which, if it's anything like the previous bull markets we've seen, still has years to go. And I see Mark in the chat here. I'm just looking at the chat for the first time. Thank you, by the way, everybody who's watching. And Mark Petty says just DCA, meaning just dollar cost average. Now, I don't give financial advice on this channel, but I take that approach. I think Mark Petty is onto something there. And if you're watching the live stream, again, thank you. One thing I do want to mention is that looking at the most recent several videos we've done, the channel's been getting some enhanced attention because of, the interest in the precious metals. It's been an exciting space for the past several weeks. But I noticed that it's somewhere between 75 to 80% of people who watch these videos and live streams are not actually subscribed to the channel. So this is a very brief call to action. I'm not going to dwell on this for too long. Please subscribe if you're watching. We're at 90,000 subscribers right now. And at 100, I get a silver play button. Forget the gold. I want the silver. So that's going to be fun. And I couldn't do it without all of you who are watching. So please do subscribe if you're not a subscriber yet. Let's talk about another thing that the Fed stated at this FOMC meeting, and that is that they are bringing their program of quantitative tightening to an end very shortly in December. Now, this is the Fed balance sheet right here. This is the Fed balance sheet, right? Peaked in April of 2022. They began drawing it down. We had the banking crisis in 2023. They had that bank term funding program, got a nice little spike, and they've been drawing it down ever since. And now they're coming to a close in 1 month, basically. So where are we at here now that they're done decreasing the size of the Fed's balance sheet? Well, we're a little over $6.5 trillion, which really, it takes us down just slightly below where we were after that massive round of stimulus and balance sheet expansion that accompanied the COVID crisis. So, I mean, they're not erasing any of that, right? It's pretty incredible. Yeah, money printer go burr. I see someone put that in the chat. 100%. That's exactly what we're going to see. And this is already a huge amount of debt that has been monetized by the Federal Reserve. $6.5 trillion, and probably soon, given the state of the economy, this is going to go, return to QE. They're going to start expanding this balance sheet. And if you're new to the channel, new to the space, this balance sheet, it represents largely mortgage-backed securities and U.S. Treasuries that the Federal Reserve has purchased, basically creating money out of thin air, buying government debt and the mortgage-backed securities to bail out the banking sector, like during the financial crisis here in 2008. And one thing you'll notice that they've had to do since the 2008 financial crisis, before that, the balance sheet was under $1 trillion, and they've had to do several of these bailouts for the economy since that time. This is like, economic heroin. Once you get addicted to this easy money, you keep having to do this. And each round of stimulus has been larger than the last, right? That's kind of the trend. And so we're going to be due for a new round soon, and it's likely going to be bigger than the previous, big injection of liquidity, which occurred in 2020. And that means it's going to be trillions of dollars. That could be a problem. I want to take a look at the money supply here in just a moment, but I do also, if you're considering stacking, I want to draw your attention to this. This is an interesting sale that SD Bullion has right now. I guess they've been approved as a purchaser from the U.S. Mint for gold. There's only, a handful of entities that do this direct purchase from the Mint. And to celebrate, they're offering a 1 ounce Gold Eagle at cost. So that's not at spot, but this is at the same cost that they get them from the Mint. So 2025 1 ounce American Gold Eagle, probably the lowest premium you'll see on that anywhere. Something you might want to take advantage of. For me, 1 ounce gold coin at this point with gold over $4,000 is a bit steep, if you ask me. For me personally. But one thing you can always stack is gold backs. You can get these for as low as $7 and change a piece. Each one's got 1/1000th of a troy ounce of 24 karat gold. And I thought this was an interesting item that SD Bullion has now, this gold back box. So you get this like foam lined box with it's airtight, it's waterproof, and you get one of these. I haven't picked one up yet. Again, a little out of my price range at the moment, but $35,000. It's actually a discount from the normal goldback pricing structure, a fairly decent one. You get 5,000 goldbacks, the equivalent of 5,000 goldbacks. So, different denominations. So not 5,000 actual individual notes, but 5,000 goldbacks. So 5 ounces of gold in these highly divisible forms. Like, this is pretty much all you would need, I would think, for hyperinflation survival kit. Leave me a comment. Let me know what you think about this box. Is anything you would ever pick up? I mean, it's kind of convenient, I guess, if you're not a stacker, if you're not into collecting, and you're just somebody who's like, okay, I've got a bunch of cash and I need something that I just want to be able to forget about, like stick it in a safe or a vault and just have it ready to go. I think one of these would serve you pretty well in the event of a major economic crisis, fiat currency failure, etc. But I'd be interested to know what you think. Kind of a neat product, though, for the prepper stackers out there. Okay, so back to the charts here. So one thing I wanted to examine, this is, again, the Fed balance sheet, which we were just discussing. So the Fed has announced an end to their program of QT. But look at when they're doing this related to the money supply, the U.S. money supply here. So they announced QT, and I'm going to be flipping back and forth a little bit here. So they announced the balance sheet drawdown here in mid-2022, around the time that the balance sheet was peaking around $9 trillion, right? And at that time, we had reached a record high U.S. M2 money supply. And as they began their program of quantitative tightening, this actually declined somewhat. We had the M2 money supply drop for, the first time in ages, the most significant drop. Mind you, it followed this huge steep rise following COVID and all that stimulus, but we actually saw a meaningful drop in the M2 money supply for about a year. It bottomed out in August. But since that time, even though the Fed has been embarked on this program of quantitative tightening, the M2 money supply has begun rising once again. And so right now, the Fed just cut for the second time, and they are likely going to continue this series of cuts. Whether we get one in December or not, I think that we likely will, but it's possible that we won't. They're going to keep cutting. They have to. It's how the system works. The dollar has to be debased. And they're doing this at a time when the M2 money supply is at a record high. They're cutting rates. They're ending QT. You've got the stock market at or near record all-time highs, all of the major indexes. You've got gold and silver near their record all-time highs. Yes, we've had a correction, which is, again, in my view, just a gift for stackers when you look at everything that's happening here. It's not like the gold and silver have topped, especially not in nominal terms, because the name of the game here is dollar debasement. Look at that inflation data that we got late, right, because of the government shutdown that we just got on Friday. Annualized inflation, 3% year over year, nowhere near the Fed's 2% goal. If you think about it, it's 50% over their goal, right? So 1% would be under, 2% would be right at the goal, 3%, that's 50% above their goal. And they're cutting. They're beginning to stimulate once again. So there's no chance, I don't think. Again, take this as just my opinion, my analysis. It's not financial advice. Just because I say I don't see any chance that gold and silver have bottomed, or rather have topped, that's my view. I just don't see any possibility, really, that they have topped at $4,400 and $54 respectively. Now, that doesn't mean that they couldn't possibly fall further from here before they resume their bull run. I don't have a crystal ball. If I could time markets perfectly, I'd be a millionaire or billionaire, which I'm not. But it seems very likely to me that even if we do see further correction here, that it'll just be another opportunity to buy, because the writing's on the wall here. The dollar is being debased, and there's not going to be any stop to it, right? If they wanted to control inflation and really get inflation under control, they would not be cutting right now. They would not have cut yesterday. Inflation is well above their target. They should have hiked, right? That would have been the move. You see gold approaching $4,400, and you think maybe you want to do something to support the fiat currency that the gold is priced in. You see silver breaking out above nominal record all-time highs. Maybe you should do something about that as the Federal Reserve, but they're not going to. They're going to continue making moves which support higher metals prices. I wanted to look at another chart. Let's take a look at platinum. So platinum also corrected, sold off alongside the other metals, but platinum's chart looks very good here. It really didn't even violate the uptrend that it has been in since April. In April, platinum was around $900. It was under $900 actually at the lows here. And right now, it's almost doubled. It's at over $1,600. So yeah, it's not near the absolute highs that it was at. But when you look at that trend line, it bounced off of it repeatedly, right? So the platinum market is another one of these markets that it just suggests that the bull run in the metals is intact. We can look at palladium. Similar story in palladium. Yeah, it corrected, but look how steep the increase was in palladium before this correction. So palladium's bull market well intact here. Copper. Copper is doing well, right? We had, the tariff shenanigans and all this stuff with these drops in the U.S. price, but overall, I mean, there's still a strong uptrend here for these industrial metals, for precious metals, and there's multiple factors driving that. The biggest one, in my view, is the debasement of the currency that they're priced in, and I mean, that's the factor that nothing is likely to change anytime soon, and that kind of feeds into the other factors, right? Like central banks around the world wanting to get their hands on hard assets. You've even got sovereign wealth funds like the Saudis investing in the SIL ETF and the SLV ETF, getting a taste for that other precious metal, silver, not just gold anymore. But there's also, the industrial case. You've got all these AI data centers being built up around the world. That's going to require a huge amount of silver. The silver market especially is just, it's poised for a huge move higher. And silver, even at $48 or even at $54 its high, is still very cheap relative to other assets. All you got to look at, and I don't have the chart pulled up right now, but you just look at the Dow to silver ratio, right? Look at the Dow relative to the price of silver. If you price the Dow in silver, silver is still very cheap. You can compare silver to gold. The gold to silver ratio is still very high. Silver is still very cheap relative to gold. I mean, gold has taken out its inflation-adjusted previous high from 1980. Silver has not done that. Silver would need to be around $200 to accomplish that, right? We've only taken out the nominal price high from 1980 in silver. So anyway, this is all good news for silver here. And I think that while short-term forecasts are a little bit, perhaps less reliable than the long view, the technicals seem to support the fact that we've bottomed here in this correction. And it was a sharp correction, but I suspect it is going to be short-lived. And that's something that we've witnessed in this bull market. And I think it's something that's going to continue to be the case. We may see these sharp sell-offs and a lot of volatility here. Fiat currencies and fiat global reserve currencies, they're not just going to go quietly into the night, right? It's going to be tumultuous. It's going to be very volatile as we see this change occur in the global economy. And the precious metals are going to have an important role in that shift. But to me, I'm actually kind of glad for the volatility, right? Because if your convictions are in line, if your convictions are strong, and mine are fairly strong, that fiat currency is not going to be a good long-term store of value and that the metals will be, then dips, you should be glad for them, right? Just get some silver cheaper. It's still a buyer's market, right? You can get junk silver at spot right now. You can get pre-1933 gold very inexpensively right now. You can still get gold backs. They're still available, right? Because there's going to be a time, I suspect, in the next, I would say within the next year, right before the end of 2026, we're going to see another event like what we saw back in March of 2023, where gold and silver sort of became this, as Mike Maloney would say, unobtainium kind of stuff, right? Where it's just like you go look and there's nothing good available. You'll probably see 40% Kennedy half dollars, and that sort of thing will be available for some crazy markup over spot. And things like Eagles and graded U.S. gold coins and even junk silver, it's going to be in short supply. Junk silver especially. Junk silver, last thing I'll kind of leave you with today is the dynamic in junk silver is really fascinating, right? I'm going to pull up, they have junk silver on sale. Yeah, they still have junk silver on sale over at SD Bullion at spot. And the reason that they're selling this stuff at spot, we've talked about this before, but I just want to really reiterate it, is because so many retail investors are coming in and seeing these record all-time high prices, and they are selling their silver. And the refineries that melt this stuff down to get it into the 0.999 silver that you need to back up something like, say, a futures contract, right? You got to turn it into like a 1,000-ounce bar, and you got to purify it because junk silver was meant to circulate. It's 10% copper, 90% silver. To make a tougher alloy, you got to melt the stuff down. The reason that they're so backed up and they're not buying it anymore is because they're melting huge quantities of this stuff down. Now, this has already happened a few times in history. Like in 1980, we've talked about, there was that article published by the PCGS. It's called After the Melts. You can Google that if you want to read it. I've read it in several videos, so I'm not going to revisit it now. But they interview these old-time coin dealers from back in the 1980s, and they talk about how many junk silver coins got melted down, like, millions of dollars face value. And it seems like that's happening again. So, at some point, junk silver is going to stop being this thing that, trades at spot price, and it's not going to come back down, right? Eventually, enough of this stuff is going to be melted. There's only so much of it out there. It's only, they haven't minted it since 1964, right? So it's been a while, over 60 years, since they were actually making junk silver. So the supply is limited, and it's shrinking, and it's shrinking a lot right now. They are melting these coins down, and you can buy them at spot. So, this to me is like a no-brainer. Like, get your junk silver. And again, not financial advice, just telling you what I've been doing. Watch the unboxing videos on the channel if you want to see what I've been stacking. Also, this is an interesting notice. I haven't talked to anybody over at SD Bullion, but they've got this notice on their page now that says high order volume may result in brief processing delays. We're working hard to ship all orders quickly and securely. So to me, what that means is that stackers and retail investors are being smart here, and they're buying this dip that we have seen in silver, which may be coming to an end here, right? And I'm glad I've been stacking all along. I bought some silver over 50 bucks. Am I sad about that? Do I care? No, because I think that the dollar price of silver is going to be much higher than that in the relatively short term. And I don't know what the event will be that creates this like unobtainium scenario like I'm talking about. Could be some problems in the banking sector. That's what it was in March 2023. Remember, junk silver was trading at 50% over spot. Silver Eagles were trading 100% over spot. And that was like buy and sell. They had relatively narrow spreads. If you had a Silver Eagle, you could sell it for almost 100% over the spot price back then. It wasn't just if you were trying to buy them. But that could happen again easily, right? And I think that the markets are ripe for that. Just look at how much buying is likely coming into this market. If SD Bullion is now having processing delays because the spot price of silver has dropped 10%, then that means that there is money sitting on the sidelines waiting to come in. And I think there probably were a lot of people who saw the silver price break 50 bucks and they thought, hey, man, I wish I had gotten in, and now they're taking advantage, but this is going to be a brief window. So anyway, let me know if you're stacking in the comments below. Please do subscribe. If you don't subscribe to this video, we're almost a half hour into the live stream at this point. If you're not a subscriber and you watch these videos regularly, please, I beg you, do me a favor, click the subscribe button. It takes a brief moment. We're very close to 100,000 subs, and I can't do it without you. So please, do subscribe, share these videos with your friends, and thanks for watching, everybody. I really appreciate each and every one of you. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.